Made Easy, all right? Forex Made Easy. Now, the Forex Made Easy is our own beginners to intermediate level school that takes you from the scratch, from the very scratch. So yes, even if this is your first time coming in contact with Forex and you've never traded before, and you really do want to learn how to trade, I can assure you, you are in the right place and you're with the right people. Now, somebody will also be asking me, how much do I need to enroll in the Forex Made Easy school? Guess how much, guys? If you know how much, guess how much? Because it's actually going for a very small, tiny fee. All right, a very, very small, tiny fee. All right. So guess how much? Guess how much? Guess how much? I want to know. I want to know. I want to know, especially for my friends now, my newfound friends, all over Africa. Guess how much? $100. Okay. Okay. 2,000. Coco said $2,050. Okay. 0.00 free. 100,000, okay. Ashinike, okay. $200, Donkingo. All right, amazing. You guys are doing a good job. $500. Whoa! All right, so you guys are actually doing a good job guessing how much that is going for. Guys, let me tell you the truth, right? At EQ Markets Global, every single thing you're going to be getting, every single knowledge you'll be getting is completely free. All right, we will never charge you a dime to attend any of our webinars or to attend our live market sessions. Even when we trade NFP together, and we've been making so much money for the past 19 months. That is 1 year and 7 months. We've never charged a dime from anybody to be part of this event. My Nigerian guys who have been with us for the longest, can you please, all right? Can you please, don't worry, it is recorded. I'm going to send the recording after. Can you please attest to this, that we've ever taken the money from you? All right, the Nigerian guys, any Nigerian, I know there are so many Nigerians here that have been with us for the longest. Have we ever taken a dime from you, charged you any amount to be part of any of our webinar? Okay, Jalam is totally free. All right, everything free. All right, so thank you so much, guys. Yeah, thank you so much. Thank you so much, guys. So we never ever charge a dime. So I'm just saying, because I know some of the first reaction we got from most of the Ugandan guys and also the South African guys is that, who are these guys? These guys are scam. Oh, these guys, they will just ask you to pay money, they will not give you anything, or will they even share what they know with you? They will not. You know, especially from my South African brothers, man, I received a lot of bashing from you guys. But don't worry, I understand. In fact, one of them outrightly shouted me and said, you know that Nigeria and South Africans were enemies, we're not. And I'm like, I'm not enemy with anybody. Come on. We're not enemies, especially when it comes to knowledge or when it comes to anything that has to do with knowledge and money. Don't be enemy with anybody. Please, I beg you. Don't be enemy with anybody. If I have to do a business with a South African that will profit me and will also profit him, we're not enemies. We will do that business together, right? And generally, I was in South Africa last year, August, in Johannesburg. I mean, come on, I have South African friends, and I don't see us to be enemies. I was in Nairobi. I was in Nairobi just last month, and I mean, come on, we're good friends. All right. And I'm even planning a trip to Zanzibar, Tanzania, or even Kampala, Uganda, sometime this year. And come on, guys, we're not enemies. Let's learn together. Let's share value together. Let's help ourselves grow together. That's basically it, right? No enemies anywhere. Okay. So everything free. Which South African trader do you know? All right. Somebody's asking, which South African trader do I know? I know oh God, what's this? What's this his name? Ah, what's the youngest richest South African trader? Oh God, I've forgotten his name. I've forgotten his name. I used to follow him up. All right, I've forgotten his name. All right, so guys, let's jump straight into business, okay? Let's jump straight into business. So tonight we're learning how to build a profitable forex trading strategy. All right, how to build a profitable forex trading strategy. All right, how to build, yeah, Sandile Shezi, yes. In my early years of trading, I used to follow up Sandile Shesi a whole lot. I liked him because he was young and he was making the kind of impact I was wishing to make in the forex industry. So Sandile Shesi was one South African trader I followed for many years until the whole scandals and everything, and then he was no longer being too active online, and then we had to switch as well. All right, so guys, let's go. Let's quickly go over how to build a profitable forex trading strategy. Now, before I start on that, I want to ask, what are your convictions before you place your trade? All right, let me know. What are your convictions just before you place that trade? What are your convictions? What are the things that runs through your mind? Why exactly do you buy and why exactly do you sell? I just need a few persons to give me their own perspective, and then I'm going to share what I have with you tonight. Okay? Let me see. Let me see. Let me see. Directions of the market. All right. Benjamin said, anything can happen in the market. Oh, okay. To make profit. Yes, exactly. Why are you trading? Is it to make loss? Of course, you're trading to make profit. So, because you're trading to make profit, you look at the market and you make a decision either to buy or to sell. So, the question now is, what are your convictions? What do you see in the market that prompts you to buy or prompts you to sell? Something, something, something. Yes, somebody said market structure, somebody said price action. Sonito said trend, amazing. When I see a strong trend, amazing. There is noise there. Okay. Oh, noise? I don't really think so. My personal convictions, and it should go with what I know. Wow. Snow said, my personal convictions, and it should go with what I know. Amazing. Check the market trend for a day, market structure, market trend, confluences, candlestick confirmations. Amazing. Market structure. I trade follow up. Oh, amazing. So I can't really go all. All right. So thank you so much for contributing. And now let's quickly look at it. Now, some of the things that constitutes our convictions before we take any trade. Number one is our sentiment, our bias, or the guts that we have. All right. So we're thinking either to buy, either to sell, or either to continue holding that trade. All right. All of these could be based on our sentiment, our bias, or our guts. And that's one of the ways actually that people use this to trade. Right. But hold on, I'm going somewhere. All right. Another way is forex signals. Oh, there's somebody you're following up, and then the person just drops a trade signal, and you're looking at that trade signal, and it's like, oh, look, this trade signal is good. I've always been following up this guy, and this guy has not actually dropped any trade signal that is bad. So now that he has dropped a trade signal, sorry, I think I need to do something. Right, just give me a second. So that some people I think are trying to um some people are trying to write on my screen. Yep, so I've disabled that now. Amazing. So some people, they take trades, their convictions is based on signals that they get from whoever and wherever they get that signal. Making sense? Now, another way that people get their convictions to trade is understanding the technical analysis, which is the major thing in the market. Understanding what? The technical analysis. Now, whether or not everything that we have said falls within these three categories, is either it is you're taking a trade based on your sentiment, or based on your bias, or based on very strong guts. Some people enter the market with a very strong gut and audacity. It could be that, it could be forex signals, it could be technical analysis. But whichever way, we know that one of these is actually playing out. Right now, I'm going to tell you something. Understanding technical analysis is the best way. One of my mentors in my early years of trading, I tried bringing him on board, but the time frame I was giving him was not too favorable. His name is Professor Andreas Talasinos. He's an Italian. So he was one of the people that really shaped my early years in the forex industry. And this is about my 7 years trading the financial market. Okay. And then Mr. Talasinos, Andreas Talasinos, will say something. He said, the aim of every technical analyst is to find where a new trend begins, because that is when it becomes profitable. So he's talking about technical analysis because he knew that technical analysis, understanding technical analysis, is the bedrock upon which profitability is built. Okay, upon which profitability is built. So if you have just guts to enter the market, you're probably going to lose your money. You need to understand the market dynamics. You need to understand the technical playout of the market. You need to understand a lot about the market before you're making a very well-informed decision whether to buy or to sell. And so we're going to be basing or talking more about technical analysis. All right. So you don't rely on the analysis of others, that is signals, right? Even though you are being fed with signals, even though you get signals, it is always good that you know the market for yourself. It is always good that you understand how to analyze the market for yourself, and not just somebody telling you buy, put stop loss here. I'm not saying it's bad. It's not bad. We still do it. There are still our community. We still spoon feed them, right? Because we want everybody to make profit, and people do not want to really learn. All right. Or some people do not even have the time to look at their screen. But then they know they're in the office, they can't open the Forex chart, but they know that, okay, look, I trust these guys. If they drop signal, buy, sell, I'm going to place that signal and they make money. It could be an easy way, but let it not be the strong reason why you are taking a trade, right? You don't also trade based on mere sentiment, okay? You don't also trade based on mere sentiment, bias, and guts. No, don't ever do that, because you're not a gambler, except you are, all right? Except you are a gambler, then you're going to go based on sentiment or bias or guts, all right? So if you are not, then you need to have a valid reason for every trade you enter. You need to always answer the question, why am I looking at this area to buy or to sell? Okay, why am I looking at this area to buy? Some of us, let me show you how we place trade. For some of us, every single time we open our phone, we open our chat like this, we must place a trade. How many of you are like that? If you're like that, just let me know. Just simply type in the comment section, I'm here, I'm here, I'm here. I'm here. Every single time they open their trade, they open the chat on their phone, man, they must place a trade. But is it supposed to be? Hell no, you're not supposed to place a trade every single time you open your chat. No, right? You must know the reason why you are placing that trade. All right, you must know, why am I looking at this area to buy? Why am I looking at this area to sell? It is until you understand the dynamics or the technology behind the area to buy or the area to sell, that is when you should. If not, you're going to be losing money. All right. And the aim of the Forex Mentorship Cohort is to ensure that we bring people to the understanding of these things so that they don't lose money. All right. So I'm still going to be running because there are a lot of things to look at within the 1 hour, 30 minutes stipulated time. All right. So permit me, because I'm going to be running. All right. So yes, okay, let me go back. So I was saying that the easiest and the best way to answer this is called potential trading areas. All right. It's called what? Potential trading areas. Potential trading areas. Potential trading areas. How many of you want to know this? How many of you want to know potential trading areas? It's just one of the major things that I have to teach you, but I have to bring out this to teach you today. All right. The other things, I can't finish them up in the 1 hour, 30 minutes webinar. So I'm going to be shifting them to our Friday mentorship programs, which is also still free for every one of you to join. Okay. All right. So let's go. Let's go. I can see a lot of people saying me. So let's look at potential trading areas. What exactly are potential trading areas? What exactly are potential trading areas or potential trading zones? And I'm going to be defining that to you. All right. So potential trading areas, also known as key levels, psychological levels, or areas of value, defines the price area of the market where we believe that our trades will have higher probability of success. And that's where the risk reward will be in our favor. All right. So you are looking at the market and you must define that zone. Please stay with me, because I'm going to take you through things for you to understand how to find those potential trading areas. All right. You don't trade in every area. You don't place your trading every time you open your chart. You're not a gambler, so you need to find that potential trading area, that key level, or that psychological level, or that area of value that defines the market area that gives you higher probability of success. All right, that place where you know that if you put your risk to your reward, you're going to have more for reward than your risk. All right, that's where we call what? The potential trading area. All right, now these potential trading areas can be established in many ways, such as horizontal support and resistance. Please be jotting this one down now. If you haven't been jotting down, please do jot down now. Okay, now we are going to the potential trading areas is established in many ways, such as what? The horizontal support and resistance. Oh my goodness, time will fail me again and again. 1 hour 30 minutes, guys, is not just enough to do justice to what I want to share with you guys. uh it's not just enough. It's just enough. I would have loved to show you guys one by one in depth. All right. Don't worry, I'm recording this. I'm recording this. All right. I am recording this. All right. I'm going to give you for free. Don't worry. I want to clear the mind of those people that said that they will not teach us what they know. All right. Or those people that said we're scam. I want to clear your doubts that we're no scam. We're here and we're real and we're live. All right. So let's go again. So potential trading areas, all right? Under potential trading areas, you can know those areas by what? Horizontal support and resistance, or what we call dynamic support and resistance. For you to find the dynamic support and resistance, you then have to deploy the use of moving averages. All right, it's moving averages that you can use to know dynamic support and dynamic resistance, and I'm going to be touching that very briefly, but I can expatiate more on that. All right, you can also use trend line support and trend line resistance to find the potential trading areas. Then pivot point levels. All right, pivot point levels are also good ways to find potential trading areas. Then key high and key low levels. All right, key high and key low levels. I'm going to also be showing you that very briefly. Then another one is the Fibonacci. All right, the Fibonacci support and Fibonacci resistance. There are a lot of traders that do not know how to use Fibonacci, and I'm wondering, come on, guy, what are you doing? Why would you not know how to use Fibonacci, and you want to be profitable? Fibonacci is also another very powerful tool. It is not just Fibonacci for nothing. All right, Fibonacci is also another very powerful tool. Sorry, guys, let me take water. All right. So Fibonacci is also another very powerful tool, but I can't do justice and all to this, right? So yeah, Fibonacci, but I know very well I'm going to be teaching you I've taught for my community. I've taught everything I'm showing to you here. Every single thing that I'm showing to you here, the Nigerian people that have been with us for some time, they can attest that I have done justice to all of this topic one by one, one by one. Whether Fibonacci, whether horizontal support and resistance, dynamic trend line, pivot points, right? Other blocks, fair value gap. The Nigerians in the house, can I get testimony from anybody? They know I do justice to this every single time I jump on a webinar with them. In fact, for every single time I'm on a webinar with them, they know it's value, 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 beginning till the end. They already know that. Yeah, Jalam is saying we do. Hey, Mr. Favor, Uday Kong. So the Nigerians are already in the house. They know this. All right. So guys, let's quickly shoot now. Let's quickly shoot. All right, so let's quickly jump on this now. So please ensure that you note everything that I have mentioned here. Horizontal support and resistance, dynamic support and resistance, trend line support and resistance, pivot point levels, key high, key low levels, Fibonacci support and resistance, order block and fair value gap. These are the ways that you can use to find potential trading areas. All right, potential trading areas. Now let's quickly move. Let's quickly just touch briefly about a few of these ones. All right, horizontal support and resistance. We all know for those, this is just beginner stuff, so I'm just mentioning that This is the most basic way to find support and resistance. First, you look for past price area or level where the market movement are difficulties to break above or below. I'm going to be showing you all this. Then you mark that level with an horizontal line which extend into the future price area for reference purpose. Now, an example is this, okay? An example is this. If you watch here very closely, all right? If you watch here very closely, you can notice that the market came to this zone and it failed to break this zone. And then what? It came again testing this zone and failed to still break that zone. So what do? We draw this horizontal line to touch this zone and this zone, and we extend it into the future such that the very next time market is coming to test this zone, there are bigger chances that the market is going to do what? Buy. As simple as that. You have defined your potential trading area or your potential trading zone. Now, this is the very basic one that every single person should know. All right. And that's why if you don't know it, our Forex Made Easy classes should be for you as well. All right. Don't say, oh, I've been trading for 4 years, so I don't need a beginner class. Do you know how we do our beginners class? It might be you might learn something, just one thing that could change your life forever. All right. Okay, so let me see. Some people, I'm not whoa, Mr. Moses. Whoa, so Mr. Moses can also attest to the value we share. He said, I am also, but though I'm not Nigerian. Wow, amazing. We that are beginners, how can we know? All right, Mr. Faisal is asking, we that are beginners, how can we know? That's what I'm saying. That after this, I'm going to tell you how you can join the the Forex Made Easy classes. All right, I'm going to tell you how you can join the Forex Made Easy classes. Obalim said, this is Joe from Uganda. Help me clarify about Fibonacci retracement and Fibonacci expansion, sir, when you're thinking about it. All right. So this is not the real class for it, but we're going to touch briefly about that maybe if we look at the chart. All right. Okay. You guys can zoom or change landscape. Yes, exactly. All right. So you can turn your screen from portrait to landscape so that you can see all that. All right. So guys, let's quickly go because time is far against us. All right. So this is a perfect example. All right. This is a perfect example of what? A support area. Okay. A perfect example of a support area. I'm going to give you another example. Now, this is a perfect example of a resistance area. Resistance, why? Because the market came here, all right? The market, okay, let me pick this. The market came here, all right, but found it difficult to break above that level, and so it fell. It came the second time, found it difficult to break above that level, so it fell. What happens? We're going to draw an horizontal line across this zone such that the third time or the fourth time this market is going to hit that zone, we're going to be expecting what? More resistance on that zone. All right. So that's horizontal support and horizontal what? Resistance. For trend line support and trend line resistance, all right, these are support and resistance areas established by trend lines. My goodness. Now, I have done an amazing job on trend lines. So this is what I want to promise you guys. Because it's Forex Mentorship Cohort, and I cannot just teach you everything about horizontal support and resistance, trend line support and resistance, Fibonacci, order block, fair value gap, and all that. What I will do is this, guys. I'm going to be telling you at the end of this webinar how you can also be part of our community completely free, attend all our webinars completely free. Now, if you are with us for the next 3 months, I promise you, for the next 3 months, if you're with us, the value you're going to learn, I promise you, if you pay $500 and learn it anywhere, come back to me. I would do something for you. All right. So please stay till the end. Don't go anywhere. Stay till the end. I'm going to tell you just exactly how you're going to get all of this knowledge for free. Right. But because of this, for the cost of this event, right, we will just be taking things a bit peripheral. But there is something I want to really dive in deep, right, for today. So let's quickly go ahead. So trend lines are not horizontal lines, right? Trend lines are not horizontal lines. Let me show you what I mean, right? Let me just show you what exactly I mean. So this is an horizontal line. So we use horizontal line to find support and resistance areas, all right? Horizontal support, horizontal resistance. But whenever we are talking about trend lines, we're talking about diagonal line, all right? diagonal line. This is a diagonal line. This is a trend line. All right. And so we can use this diagonal line, or even if it's drawn like this, we can use these diagonal lines to find amazing zones where we can find what potential trading area, whether to buy or whether to sell. See, the decision, listen carefully, guys. The decision on when to buy, where to sell is one of the most important decisions that you will ever make. Because if you don't know where exactly to buy and where exactly to sell, you cannot define them, then you will never be profitable. All right. And that's why this class is extremely important for everyone. All right. So let's quickly run through now. So share the slides. Okay. Every time prices approach the trend line, we get high probability that the prices will bounce off the trend line, making it a potential trading what area. All right. Let's see a very good example. This is an uptrend, right, guys? Can everyone look at it and tell me? Can everyone look at it and agree with me that this is an uptrend? Right now, this is an uptrend. Can you see the diagonal line? Exactly. Can you see the diagonal line now? Now, you see the diagonal line move from this point all the way up, right? Now, if you look at it very closely, this market at this diagonal line was drawn to touch this point and this point, because these are the obvious bottoms, the obvious, very obvious bottoms that we can connect with a diagonal line. Now, what do we say? We said that what? Every time prices approach the trend line. Now we've drawn this trend line touching here all the way to this point, and we extend it into the future. Let us assume that the whole of this place here have not been formed, so we don't know what is happening here. Let's assume that the price was forming somewhere around here. Okay, now good. Listen, so we said every time prices approach the trend line, we get high probability that the prices will bounce off the trend line, making it what? A potential trading area. Making it what? A potential trading area. Now, what happens the next time, the very next time market came into this the trend line? What happened? Can we see that prices bounced off, giving us what? A buy opportunity. Another time prices came into this trend line, it bounced off, giving us what? Another amazing what? Buy opportunity, right? So the trend line is also another very amazing way that we can use to find what? Potential trading areas. All right, this is another example for a downtrend. Yes, I'm going to be dropping the video for you guys to watch even after now. Okay, now this is the trend line kicking off from here and then here again, but extending it into the future. Every single time prices came touching that trend line, it gives us a potential trading area where we can decide whether to buy or to what? To sell. Okay, amazing. So let's quickly run through because of our time. All right, I'm still keeping to time. This is 7:43 here, so I've still got more like I got like 40 more minutes. All right, 40 more minutes with questions and answers. So support and resistance levels which do not fit to touch horizontal lines. Okay, sorry, which is this? Sorry. So these are dynamic support and dynamic resistance. All right, now for dynamic support and resistance, these are basically support and resistance levels which do not fit to touch the horizontal lines or the trend lines. They when you draw your trend lines, okay, let me show you that. So when you draw your trend lines like this, right? Now, watch this. Just watch closely. Now, the market bounces off from here, all right, and goes off. Comes touching here again, bounces off, and goes off. Now, let us assume that this is a Forex chart, and while this is, all right, this is, okay, this is the trend line, right? Amazing. Now, please follow me. So we want to find the potential trading area, right? If we want to find the potential trading area, it will be this zone here, all right? It would also be this zone here, all right? So we're talking about potential trading areas now, guys, right? Potential trading areas. It will be this zone here and this other zone here. Now, the big question, okay? The big question now is, what happens to this zone here? All right. Another question is, why can't we find a buy opportunity here? So these areas that did not come to the trend line, whether it is trend line or whether it is horizontal support and resistance areas, right? Those areas are what we call the dynamic support and dynamic what? Resistance. And there are ways to find this dynamic support and dynamic resistance. All right. Too many ways to find dynamic support and dynamic resistance. And your ability to understand and find this dynamic support and resistance also contributes to your success in the financial market. All right. If I'm still making sense, please, you can type in the comment section, making sense. All right. If I'm still making sense, please type in the comment section, making sense. Now, amazing. These zones can be found, number one, using amazing. Thank you so much, guys. So I know that you're here with me. Amazing. Now, these zones can be found using the moving average with periods like 50, 100, 200, all right? Which price movements always respect. They always respect them. The 50 moving average, they always respect the 100 moving average. They always respect the 200 moving average, all right? Prices are many times seen to bounce off the moving average, showing that they can be potential trading areas too. All right. So showing that they can be potential trading areas too. Amazing. So now let me just quickly show you things. All right. Just show you a few examples. All right. Number one example here, we can see number one example. Prices came. This is a mix with 50 period moving average, and the blue one that is not showing too well is 100 period moving average, right? Now, if prices come into the 50 or the 100 period moving average, they are most likely to respect it, bouncing off from that zone. If we want to put a trend line, all right, most probably, all right, let's draw the trend line now together, right? So that I want to carry everybody along. I don't want anybody to be missing here, all right? Everybody must be carried along, all right? So let's draw the trend line. Let's assume even on this small chart, let's draw the trend line. All right. Now, the question is, why on earth did I draw my trend line that way? All right. So I drew my trend line because this was a potential area. And then again, this was the obvious bottom where market got to. Now, the big question comes. All right. The big question comes. So what happens to this zone? Because of course, market came, it did not touch the trend line. But then what happened? It flew up. We would have had a massive profit if we had entered a buy somewhere around here. True, guys. Somewhere around here, if we had entered a buy somewhere around here, we would have had a massive buy. Okay. Now, what happens again to areas like this area here? We would have had a massive buy if we have entered for a buy. Good. Now, one of the ways we can use to identify this dynamic support and dynamic resistance, one of the very easy ways is what? The use of the moving average. And so whenever prices come into the 50 moving average or the 100 period moving average, prices are most likely to bounce off. So number one is finding what? The bouncing off zone, all right? The potential trading area. Now, potential trading area does not constitute on how alone itself. Potential trading areas, how to find it alone does not constitute a profitable trading strategy. Never. All right. But I just chose this one to share with you in depth tonight. Right. I just picked this one to share with you in depth tonight because it is the foundation on which every other thing will now be built on later on. Right. Now, amazing. Let's quickly run through. All right. These are many more examples talking about the moving average. The red is 50 period. The green is 100 period. And then the black is 200 period moving average. What happens whenever you see prices come into any of these periods, right? It shows you that these are potential trading areas or potential trading zones where buy can be defined or sell can be defined. All right. So since prices is trading above the moving averages, it's obviously what a buy opportunity we will be looking at, right? So if we're looking for a buy opportunity, if prices come into the 50 period moving average like it did here, do you see that was a sharp buy? All right. Or if it comes into the 200 period moving average, in fact, that's the most reliable buy that you can get whenever prices comes into the 200 moving average. All right. like you can see here, and as well like you can see here, prices flew up all the single time it came into this zone. Why? Because that zone is a potential trading zone. That zone is what we call a support, a dynamic support area. And don't always forget, at support areas, you do what? You buy. At resistant areas, you do what? You sell. Now, having laid the foundation, I will be going in depth into what we have to do today. And then I just want to show you guys, just something very simple, all right, to take home. All right. I know I've been sharing something really nice that makes sense. You already let me know. Yes, somebody's asking, is it EMA or is it SMA? Now, I'm not teaching you a strategy. I'm teaching you how to build a profitable trading strategy. When I want to teach you a strategy, I'll tell you if it is EMA or if it is SMA. All right. If it is exponential moving average or if it is simple moving average, I'm going to be telling you that. Right now, I'm trying to lay a foundation on how you yourself, after this webinar, you can go back and try to build a trading strategy for yourself. That's the most important thing. All right. That's the most important thing. Now, potential trading areas or areas of value, whichever way you want to call it, key psychological levels or whatever, are unarguably levels or areas to find the most successful entries into the market and the most reliable risk to reward setups. All right. They are the most reliable, unarguably, they are the most successful entries into the market, right? So you want to find when to buy, all right? Learn to use what we call the trend line. Learn to use what we call what? The trend line. So that you'll be able to draw your trend lines. And for every single time market comes into the trend line, you do what? You buy or you what? You sell. Making sense? Good. All right. So unarguably, this will give you an opportunity to find the best areas to buy and the best areas to sell. All right. So what is it? Find them, map them out, and trade them. Find them, map them out, and do what? And trade them. All right. I want to finish with the theory, then we go over to the chart so that I can show you something to take home tonight. All right. So 5 easy steps to building a profitable trading strategy. All right. 5 easy steps. Easy peasy. 5 easy steps to building a profitable trading strategy. Are we ready, guys? Are we ready? Are we ready? Are we ready to hear this one? Are we ready to hear this one? Listen, what I want to share with you tonight. All right, so sorry guys. So sorry. I had to quickly change my internet providers because I noticed that the one I'm using currently was giving some issues. So I had to just quickly switch over. All right. So can we continue now? Can we continue now? Amazing. Can we continue now? Yes, 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 yes. I had to just quickly do that. Amazing, 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 amazing. All right. So five easy steps to building a profitable strategy. And you all said that you are ready to hear this, okay? So I'm going to be sharing that with you. All right. So these are the 5 easy steps I was able to draft out. And guys, after learning this tonight, I need you to go back and revisit your trading strategy. If your trading strategy does not, all right, follow this trend, please revisit it again. All right. Please revisit it again. If it doesn't follow these steps, please revisit that trading strategy again. All right, no problem. I heard your request, and I think let me check. It's still recording, so I'm going to be sending you the pre-record. All right. So number one thing that you are going to look at first and foremost is to understand the market structure. The questions that should come to your mind is the market an uptrend or a downtrend? Until you are able to identify what trend is the market, is it going up or is it coming down? Please do not trade. Please do not trade. You probably not make a profitable trade. All right. You will probably, I can assure you that you'll probably not make a profitable trade. If we can't hear anything, then the meeting is not relevant as we are in not learning anything. Right? Mr. Harrison, please, what do you mean? Can everyone hear me? Can everyone still see my screen? If you can hear me very loud, you can see my screen very clearly. Please type in the comment section loud and clear. Because I don't want to talk when you can't hear me. It doesn't make any sense. Then we should just be out of here. Right? So loud and clear, loud and clear, loud and clear. Everyone can still hear me. Whoa. Okay, so I think Mr. Who said that? Mr. Harrison, I think you need to check your audio connections again. All right. Please just check your audio connections again. Check your audio connections again. All right. Amazing, 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 amazing. All right, thank you so much, guys. So let's quickly go back. So until you understand what bias is the market, until you understand and can tell confidently that the market is going up or the market is coming down, then that is only when you should enter the market. But if you are not able to define, ascertain, or tell that this market is going up or this market is coming down, guys, please stay clear of the market. All right, stay clear of the market. Immediately after this slide, I am going to a real life chart and I'm going to be showing you very important things. So please don't leave, okay? Don't leave. If you leave, you'll probably be missing the most juicy part of tonight's webinar. Now, what is the time frame bias? All right, you're looking at the market on a 4-hourly time frame, or okay, sorry, what is the higher time frame bias? Very important question to also ask yourself. What is the higher time frame bias? You're looking at the market on a 4-hourly time frame, or you're looking at the market on a daily time frame, and you want to take a trade on that particular time frame. You need to ask yourself, if you're looking at the market on a 4-hourly time frame, what is the bias on the daily time frame? What is the bias on a weekly time frame? Now, only when you know the higher time frame bias, you can scale down back to the 4-hourly time frame and then find a very good place to go in the direction of the higher time frame bias. Let me tell you guys, every single time, always know this, all right? You can pen it down on your book, on your notepad, on your sticky notes, but please write it in capital letters. The market will always go in the direction of the higher time frame, all right? The market will always go in the direction of what? The higher time frame bias. So if you want to take a trade on the 4-hourly time frame, the overall bias on the daily time frame or on the weekly time frame is very important and key for you to know. All right, it is extremely important for you to know. All right, the network is bad. Please, we need the slides after the class. Okay. All right. So it is very, very and extremely important that you need to know if you want to take a trade on the 4-hourly time frame, it is clearly important that you know the bias on the 4-hourly time frame or on the daily time frame. If you want to take a trade on the 15 minutes chart, right? It is very important that you know the bias on the 1-hourly and on the 4-hourly time frame. This is how it works. See, now listen, guys, even if this is what you can take home tonight, I know this is not what you will take home tonight, okay? But even if this is what you take home tonight, guys, listen carefully, all right? I'm going to do something, all right? I'm going to do, okay? I'm going to do 2 charts. The trading charts, okay, trade charts. Oh, nope. Trade charts, right? And then also the um higher time frame bias charts. Guys, please listen carefully. See, listen carefully. For me, it took me pains and years of experience to know this thing. All right. It took me years. It took me years, guys, before I knew these things for myself. So please listen carefully. Okay. Now, if the trade chart, I call it the trade chart, you can call it anything. I call it higher time frame bias chart. You can call it anything you want. But just understand the concept I'm trying to explain to you. Okay. Now, if you want to place a trade, if you want to place a trade on the 15 minutes chart, right? You want to place a trade on the 15 minutes chart. That is, say, M15, okay? If you want to place a trade on M15, right? You want to place a trade on M15, please and please always ensure to know the bias on the H1 time frame, all right? Always try to know the bias on the H1 time frame and the H4 time frame. Now, when you know the bias on these two time frames, you can go to the 15 minutes time frame now, all right, and position yourself. Some of us missed. Will you share with us the record video? Oh my goodness, I will do that. I've said that countless times. I'm going to do that. All right. So when you want to place a trade on the 15 minutes time frame, right? You go to the H1 time frame and the H4 time frame. Try as much as possible to understand the overall market bias. Where is the market going on that time frame? Once you understand where the market is going on H1 and H4 time frame, you can then scale down to the 15 minutes time frame back, then find your confluence and find your potential trading area on the 15 minutes time frame. You're going to be super profitable. You are going to be super profitable. And what if you want to place a trade on the H1 time frame? All right, let's say you want to place your trade on the H1 time frame. All right, now what exactly should be the bias that you should be working with? You cannot avoid to look at the H4. All right, you cannot avoid to look at the H4 and the daily time frame. You need to know where exactly is the market going. Now, I always say this. One of the most important reasons, okay, let me tell you two reasons why. I've already told you one, but let me tell you, paraphrase them and tell you again. One of the major reasons why you need to always know the higher time frame bias, number one, is why? Because the market will always go, at the end of the day, it will always go in the direction of the higher time frame bias. So what you are seeing on the lower time frame bias could be a pullback, it could be a retracement. But finally, at the end of the day, the market will always respect the higher time frame bias. Number two reason why you need to know the higher time frame bias is so that after knowing that the market must and will and always will go in the direction of the higher time frame bias, and you take a trade, all right, on H1 time frame. Take for instance, on the H4 time frame, the overall bias is buy. Daily time frame, overall bias is buy. And I entered a buy on H1 time frame and the market started selling. Listen carefully. The market started selling. What am I going to do? I will revisit H4 and daily time frame. If I am very convinced by every standard and parameter that I know that the H4 and the daily time frame is still a buy, I'm going to leave that trade on H1 time frame I've taken that is running in loss. Why? Because I know very well that at the end of the day, the market will come back to respect the higher time frame bias. So I could be taking some losses, but at the end of the day, market will then reverse and give me massive profits. That's another advantage. My goodness. you need to understand this thing. Some people just trade for, no, you don't need to do that. All right. That's the essence of mentorship, Forex mentorship. All right. Now, if you want to trade on the 4-hourly time frame, all right, if you want to trade on the H4 time frame, all right, you want to place your trade on the H4 time frame, it is very, 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 very important that what? You know the bias on the daily time frame and then on the weekly time frame, okay? The weekly time frame. Okay? The weekly time frame. It's very important you know the bias on this time frame. Again, I will repeat myself. So that if you take a sell position on the H4 time frame, The bias on daily and weekly time frame is still sell, but the market started buying. You can hold that loss in especially if your lot size is not too big, you can hold that loss with assurance, like 99.99% assurance that the market will come back and sell. Why? Because the higher time frame bias is what? Is sell. Does it make sense? Does it make sense, guys? Does it make sense? Whoa, thank you so much. What would be the higher time frame for a 1 minute trade? All right. So for me, I am not a scalper. Okay. I am not a scalper, so I barely use the 1 minute time frame, but I'm going to answer that. I barely use I barely use the 1 minute time frame because I'm not a scalper. But supposing you want to trade with the 1 minute chart, all right, that is M1. Okay, you want to trade with the M1 chart. So let me see. If you want to trade with the M1 chart, it is extremely important that you know what is happening on the M5, all right, and on the M15. And on the M15, it simply means you're a scalper who do not want to stay too long in the market. All right. If you want to do M30, go to H1 and H4 time frame. It's extremely important. Thank you so much, guys. I'm happy that you guys are learning something. All right. So it's very, very important. I'm going to be showing you this practically, but maybe not today. If today permits, I will do that. But I want to stick to our 1 hour 30 minutes. Okay. I want to stick to our 1 hour 30 minutes. Okay. But guys, in more mentorship to come, I'm in our week in, week out mentorship, I'm going to be showing you a lot of things. I can't show you all here. All right. So these are extremely important. These are extremely, extremely important. Now, finding and understanding the market structure, where the market is going, the higher time frame bias. What is the next thing to do, guys? What do you think is the next thing to do? The next thing to do is what? Find the potential trading area. This is what I have just taken time to explain. Find the potential trading what? Area. It is extremely important. How do you find the potential trading area? By deploying the use of the horizontal or the dynamic support system, support and resistance system, which is using what? Horizontal lines to find areas that the market have not been able to break above or break below at least 2 times. Extend that line into the future. Whenever prices gets to that line, most likely prices will respect that area. Or to deploy the use of trend lines. Now, guys, I have a special video that I've made on trend lines. Okay, at least more than 60% of what I know on trend lines, I poured it out on that video. Okay, I'm going to be dropping that for you on our Telegram channel. Okay, I'm going to be dropping that for you on our Telegram channel. So immediately after this, so if you're not on the Telegram channel, please copy the Telegram link, put it up on the comment section here. All right, put it up on the comment section so that if you're not on the Telegram channel, please go join the Telegram channel. All right, go join the Telegram channel. I'm going to be dropping that video for you immediately after this class on that Telegram channel. At least 60% of what I know, or more than 50% of what I know about trend lines, guys, and I hoard no knowledge. I promise you, anything I know, it's only a matter of time. You will know what I know if you stay long with EQ markets. All right, if you stay long with EQ markets global, you're going to know what I know. You might not know 100% of what I know because I keep evolving, I keep learning every day. For the first time, all right, so for the first time in 2.5 years, I lost huge amount of money. So for 2.5 years, I've been super profitable. Don't think that even we, the mentors, we don't lose money. We do. And I know why I lost that money. I knew I lost that money because of what? Because of one thing: guts, bias, sentiment. But guys, that's by the way. So the Telegram link is dropped now in the listen. Everything I know, at least 60-70% of what I know about trend line is in that video. So you go watch that video. It will still do justice as me teaching you on this webinar, right? Pivot point levels, key high and lows, Fibonacci. I'm going to be doing a video next on Fibonacci because of you guys. All right. So hopefully this week or next week, or what will happen is immediately after the mentorship program, next week, I'm going to be doing a full video on Fibonacci and how you can use Fibonacci. I'm going to be dropping that also. So if you have not subscribed to the YouTube channel, if you have not subscribed to the YouTube channel, please go subscribe to the YouTube channel, all right? Because I'll be dropping all of these videos on the YouTube channel. Please, you can also drop the YouTube link, okay? Just drop the YouTube link as well. Then drop the Telegram link. Drop the two of them together in one comment, okay? So that they can join the both of them. Subscribe to the YouTube is for your own good, so that you can get amazing content that could help you, all right? Okay, so you can take your trades on monthly time frame with higher time frames, confirmation from 3 months and 1 year time frame. Exactly. Okay, exactly. Okay, exactly. All right. So guys, let's quickly run through. And then other blocks, fair value gaps. Also, other blocks and fair value gaps is what I have taken my time to teach my community members, and it's something we use. In fact, other blocks is what we use on a day-to-day basis. It's part of our everyday analysis. All right. And I'm going to be showing you a few things here tonight. All right. I'm going to be showing you a few things here tonight. But other blocks are also another concepts that are extremely important. All right. The smart money concept is very important. For me, I'm a full-time retail trader, but I have to learn ICT because I told you I keep evolving. And adding ICT concept into my retail trading concept has made me a super profitable trader. All right. In fact, that is what has made me super profitable in the last 2.5 years. This is my 7 years journey, but for the last 2.5 years, I have been super profitable and I have evidence. All right. Not just evidence. I have so many evidences to prove. I have my trade history. I have, if you want my FX book, I can give it to you. Even my community, I've been dropping trade signals, my trade buyers with them. They've been trading alongside and it has been super profitable. So evidence shock. Permit me to use that language, right? I know for the Ugandan guys, the only Ghanaians will most likely understand what I just said, okay? But for the South African guys, the Uganda, Tanzania, and Kenya, you probably may not understand that slang. So in West Africa here, when we say it's shock, it means it's plenty, all right? So my evidence is plenty. Okay, my evidence is plenty. All right, so guys, can we quickly run through? All right, so I'm also going to be doing a video for you on other blocks and fair value gaps. Now, okay, now let's come back. After finding the potential trading area, what's the next thing to do? Find confirmation. Oh my goodness. There is a slang that we always say whenever I teach confirmation. In fact, my community guys, yeah, they already know. Okay. In fact, okay, let me shock you now. I'm not going to say it. They will say it by themselves. All right. So for the Nigerian guys on ground, for the Nigerian guys in this meeting, what do I always say about confirmation? I said no confirmation. Okay, complete it for me. No confirmation. No confirmation. So guys, you can see no confirmation, no entry. No confirmation, no trade, no entry, nothing. If you don't find confirmation, please don't ever enter. You are not a gambler. Okay, always understand this. Approach Forex like a business. Approach Forex with the mindset that, look, you want to do this and make money off it. So one of the things is that if there's no confirmation, there is no point taking that trade. No confirmation, no trade. All right. I've also done a full video. Okay. I've also done a full video on one of the ways that I find confirmation. All right. Now, there are so many ways you can find confirmation using chart patterns. What are chart patterns? Maybe you want to look for the W patterns. All right. That's the double bottom patterns or the W patterns. Let me just quickly draw a few of them for you. For sake of time, I'll probably not be able to do all that. Okay. Okay. Sorry. Just hold on. Whoop, amazing. And then let me turn this to black. Good. So you can probably want, when I talk about chart patterns, we talk about the W patterns, right? So the W patterns can come in various ways. It can come as equal bottoms. It can come as it can come as unequal bottoms. All right. These are still W patterns, right? So whatever way, find chart patterns. It could be head and shoulder. All right. So this is the left shoulder, all right? Then this is the head, right? And then it forms the neckline. This is the right shoulder, all right? So this gives you what? If market comes into the neckline, right? What happens? The market will continue to go down. What's your take profit? Your take profit is going to be the distance from this point to this point. That's going to be the next target point. Can you see that? See, listen, see, everything you need to know about Forex, anything, no knowledge is a waste. That's what has made me profitable. Find chart patterns, whether it is a head and shoulder, inverted head and shoulder, or it is the W pattern, it is the M patterns, or what else again? What else again? Please remind me. If it is a falling wedge, rising wedge, right? What else again? If it is a bullish flag or the bearish flag, all these are chart patterns. Guys, go learn them. Go learn them. These are patterns. Chart patterns are one of the ways to find confirmations in the market, because once they happen, you already know. Okay, cup and handle, amazing. Smart fingers. Smart fingers, thank you. It's a cup and handle. Yes, although I've never used cup and handle before. All right, but I know about cup and handle, and I know it's one of the ways that you can actually find chart patterns. So guys, go use the chart patterns, learn them. Once you see them, see, good thing is, after you learn them and you know them, it's once and for all. Then the more you keep practicing them, they become part and parcel of you. Yeah, I mentioned falling wedge. Yes, falling wedge, rising wedge, right? They become part and parcel of you. So once you see them, you don't need to draw chart again. Right now, I don't need to draw charts to know where trend lines are. I don't need to draw anything on my chart to know where I should be buying or I should be selling. Why? Because over time, consistently, I have practiced again and again and again and again these things. So they are now part and parcel of me. Another way to find confirmation is candlestick pattern. One of the very easy candlestick patterns that you can always use to find confirmation is what? Who can tell me? Who can tell me? Who can tell me? Who can tell me? One of the very easy candlestick pattern that you can use to find confirmation. Who can tell me? Mention them. I know there are traders here. AMA, exactly. So the AMA is famous for its name, rejection candle. All right, rejection candle. Yes, a lot of people have heard rejection candle. Pin bar, God bless you. Pin bar, rejection candle. All right, these are what once you see pin bar or rejection candle, it's called the AMA or the inverted AMA, whichever way it presents itself. Whenever you see it on a support area, on a resistance area, you already know one thing is sure to happen. The market is either going bullish or it's either going bearish, because that's a sure confirmation. Do you understand? That's a sure confirmation. The market is either going bullish or bearish. Then we have the bullish engulfing, the bearish engulfing, the Arami. Some people are already asking if I can do a short video on chart patterns. Oh my goodness, you guys will kill me. Okay. We will take them step by step. Okay. I would first of all do a video on Fibonacci next week. Upper week, I will do a video on other blocks and fair value gap. And then after I finish that, gradually I would be doing the videos step by step, one after the other. All right. I will not rush it so that I can give you the best knowledge that you deserve. I think somebody should be clapping for me now. I think somebody should be dropping a clapping emoji for me. How do you make conclusion on finding chart patterns? Okay, when we talk about chart pattern videos, we're going to. Okay, so guys, you already mentioned it a lot. Morning star, evening star, shooting star. I mean, you guys are super amazing. You guys are just super amazing. Super, super, super amazing. Super, 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 super amazing. All right, thank you so much. Thank you so much, guys. So now, candlestick patterns, like we've all mentioned, are also amazing ways we can use to find trade confirmations and trade profitably, right? After that is what? Indicators. All right, indicators. See, people say indicators do not work, right? For me, I'm a naked chartist. Okay, I'm a pure naked trader, but I can't call myself a pure naked trader because there is always one indicator that I can't fail to put up on my chart. Nigerians, you know now, please mention the indicator in the comment section. That one indicator Coach Tonye always uses. By the time you see 3-4 people mentioning it, just know that it is. All right, Nigerians, let's go. Okay, they already know. Come on, guys. It's the CCI. So my guys already know. See, I would use the naked chart, but you see the commodity channel index. All right. You see the commodity channel index. The commodity channel index is so powerful, and I've got to master it so well that I cannot just take it off my chart. Yes, the chart will be naked, no moving averages, no parabolic stop and reverse, no Ishimoku, no what else again? None of those things are on my chart, right? Just trend lines, defining other blocks, finding hourly trade point of interest, that is trading areas. But you see that trend, that's commodity channel index CCI, it must be on my chart. Okay, it must be on my chart. And why is that? That is because that is the easiest way. See, listen, guys, chart patterns can be quite difficult sometimes to find. Come closer, let me tell you. Let me tell you again. Probably you do not hear me. Chart patterns can sometimes be confusing and difficult to find, except you have practiced it again and again and again and again. But even at that, sometimes it can be difficult to find. Candlestick patterns, apart from engulfing patterns, the bullish, the bearish engulfing patterns, right? Apart from the bullish and the bearish engulfing patterns, mm, your Nigerian traders not sabi anything. We saying that, we saying that, but we make profits. All right, so guys, let me go back. Let me go back. Please, no hate speech. No hate speech. We're Africans and we are one. Whether you're Ghanaian, you're Ugandan, you're Tanzanian, you're Kenyan, you're South Africa, we're Africans, and trust me, we're one. So please, no hate speech. Okay, right? No hate speech. Somebody is saying we don't know, we that don't know all these indicators are profitable call. Okay, I'm going to be dropping that. I'm going to also be dropping a link for you in the Telegram channel. That's why you need to join the Telegram. All right, so indicators are one very good ways. All right, chart patterns, I told you, number one is because sometimes chart patterns can be confusing or chart patterns can be difficult to find. Candlestick patterns, apart from the engulfing and rejection candles, the other ones are not so easy to put at your fingertips. Imagine you're talking about shooting star, or you're talking about the evening star. All right, the evening star is a bearish engulfing pattern. The morning star is a bullish engulfing pattern. But if you see them, how easy can you identify them? So that's the reason why I decided to go with something that could be very easy and gives you over 90% accuracy if you know how to use it. Guys, you're not understanding what I'm saying. Guys, it feels like you're not understanding what I'm saying. I said something that will be very easy to use and gives you over 90% accuracy, because confirmation is extremely important. If you don't find confirmation, you can't enter a trade. So what is the easiest way to work around this? What is the easiest way to find that confirmation? Should it be chart patterns that is difficult? No. Should it be candlestick patterns that you can't know all the candlesticks in your head? No, there is just one, and that's an indicator called the commodity channel index. Now, everything about the commodity channel index, over 70-80% of what I know about the commodity channel index, I have put into a video as well. I'll give you that video for free to go to learn. All right, clap for me now. Clap for me, guys. Clap for me. Clap for me. I'm going to be dropping that video. Already I dropped it on the WhatsApp group, but I'm going to be dropping it again. All right. I love the fact that you are not taking any comments here personal, sir. No, 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 not at all. Not at all. Despite that we're not paying for this, you still try and carry everyone along with you. Guys, not at all. Not, we are Africans. We are one. Okay. Well, see, listen. Let me tell you guys, let me just deviate and tell you guys a very short story. Then I'll come back. I have 6 more minutes left. I'll probably be able to do justice. Okay. Let me just tell you one. So I went to a club in the coastal area in Kenya. All right, somewhere around Diani. It's called Diani. Diani is a coastal area in Kenya. Right. So I went to a club, and while I was in the club, okay, while I was in the club enjoying myself and having good time, right? There were people from mixed race, people from all race that you can think of. Italians were plenty, Indians were there plenty, Chinese were there plenty, and a whole lot. And for me, every black skinned person, for me, it's a brother. Every black skinned person, I travel a lot. So every black skinned person is a brother to me. Now, in the club, I now noticed a Chinese guy was trying to molest a Kenyan girl. I'm Nigerian. He was trying to molest a Kenyan girl. So he was trying to harass her, force her to the dance floor, and trying to touch all over her body, and she was resisting. See, guys, I promise you, in my mind already, I've beat that Chinese guy. I've already given him the biggest punch of his life. In my heart, I was already telling one of my friends that went on vacation with me that, look, if we were in Nigeria, what I would do to this Chinese guy, next time you see a black person, he will never try it in his life. Guys, I promise you. That's what I was telling my colleague. But I had to respect myself because I went there on a tourist visa. Let me not be detained for beating up somebody who also came there for some, and I don't know who he is. But I promise if he were in Nigeria, he would not try it. If I go to a club and I see a black person being molested by another person, I will not take it lightly. So what am I saying? We're blacks, we are one. Whether you are Kenyan, you are South African, you are Ugandan, so long as you have this black skin that I have, you're my brother. All right. So no hate speech, please. No hate speech. Let's just share value, build profitability together. And at the end of the day, we are all happy. I want to see some of you making profit and coming to Nigeria for vacation. I will gladly host you. All right. And if any one of you outside of Nigeria, whether you're in Ghana, anywhere you are, you want to come to Nigeria, you're coming to Abuja, let me know. All right. You're coming to the Federal Capital Territory of Nigeria. Please let me know. I would give you one of the biggest hosts. All right. I'll give you one of the biggest hosts. I promise you that. All right. So I'm going to be dropping the video I've made on Commodity Channel Index, CCI. All right. I'm going to be dropping that video as well for you. All right. Zach said, I'm in Abuja, Kuje. All right, Mr. Zach, whenever you can, please come to Gariki, come to our office. Our office is in Gariki. Let's have a lunch. All right. I promise you a lunch if you can come to Gariki, our office. All right. Just let me know when you want to come. You can call our office line. All right. 0816-222-8986. All right. That's +234-816-222-8986. All right. Let me know. I promise you a lunch. All right. So, guys, let's quickly go back and momentum. Now, after finding confirmation, because my time is already up, after finding confirmation, what's the next thing? Define your risk. All right. Define your risk. Define your stop loss and your risk appetite. I have also done a lot of teachings on this to our community member. All right. I've also done a lot of no. Plus, let me put it up. Oh my goodness. All right. That's plus 234-816-222-8986. Okay. That's the number. All right. So, guys, now listen. After finding your confirmations, you are just about to enter the trade. What's the next thing you should do? Define your risk. Define your risk. All right. Now, there are so many ways to define stop loss. One of the biggest problems I have seen, even professional traders they make, is defining stop loss. See, guys, this one is so important. It is as important as defining your entry, your stop loss. It is as important as defining your entry. See, if you cannot define your risk, if you cannot define your risk, you are at the potential or you are at the risk of losing everything. If you can't define your risk, you risk losing everything that you have. So it's important that always you define what your stop loss is. Once you define what your stop loss is, then you can go ahead and define your reward. Somebody might be asking me now, how do I define what my stop loss is? Oh my goodness. I hope you guys are writing all these things down, please. Because remind me, another thing I will do video for my community. I don't do video for them because they see me literally every day. All right. So once in a while I do video for them. That's the video I'm giving to you now. Right. But then I've not done a proper video on how to define your stop loss. But I'm going to be doing that because of you guys. If you guys will agree that we're together, we're a team, and you guys agree that we should run together, I promise to do a video on that as well. I have one of the most exceptional ways to define stop loss. I promise you, if I teach you stop loss, if me personally I teach you stop loss, you can never blow an account again. See, even if you take the worst strategy given to you from the pit of hell, devil by himself, Satan by himself gives you a strategy, right? You can never, ever blow any account anymore. Right? Sorry, just excuse me a minute. All right. So listen, Guys, if you can, I'm telling you the gospel truth, you can never blow an account again. So I'm going to be doing a video for you on how to define your stop loss and your risk, okay? And then after that, defining your stop loss and your risk, what do you do? Go ahead and define your reward. Your reward should always be greater than the risk you're taking. If you're risking $10 on a trade, be aiming at making at least in the worst case scenario, $15. That's like 1.5, all right? Or you should be looking at making at least $20. That's like 1.2. Now, this is extremely important. Plug it here for me in this socket. Yeah, exactly. Now, this is extremely important so that over time, in the long run, you will be what? Profitable. Over time, in the long run, you will be what? Profitable. And after that, what next? After you define your risk, do what? Trade management. All right. My inverter keeps going off and on. Sorry about that. Okay. So trade management. I believe you guys can still see me. Yeah. All right. Trade management and follow up. Trade management and follow up. Sorry, guys, my inverter just went off, but I'm already done. Okay. Trade management and follow up. Now, even though you enter a trade, you must learn to evaluate your trade to know if you should close early. See, listen, guys, it is not all trades that you should leave till take profit level. That's one mistake a lot of people make. It is not all trade you should leave till what? Take profit level. Some trades you need to just close them early. All right? Close them early. Close them early. Because why? The market is already changing dynamics. You don't need to leave it till take profit level. Okay? Some trades you need to partial close them. Once you see that your trade is going in the direction you want, it's profitable, what do? Lock in some of the profits you've made and allow the other ones to continue to run. So you need to know all of these things. Trade management is extremely important. It's another thing that makes a lot of people not profitable. All right. So trade management, knowing when to partial close, knowing when to close early, or even knowing when to take your losses and just go home. All right. Then the last but not the least is evaluate your running trades to know if you're opening more positions or not. Okay. Evaluate your running trades to know if you are opening more positions or not. So guys, I'm going to be stopping here because already time is against me and my inverter is down, and I'm so sorry about that, guys. But I hope you got value for tonight's webinar. All right. I hope you got value. I'm going to be dropping all the videos that I said I'm going to be dropping for you. All right. I'm going to be dropping all the videos that I said I'm going to be dropping for you. All right. If you got value in tonight's session, all right. If you got value in tonight's session, all right, please type in the comment section value, value, value. Amazing. If you learn something, please type in the comment section value. Oh my goodness. The value is much. All right. So, guys, I wish to continue with you, but this is how we're going to do it. Right. I have not even shown to you, I'm not even giving to you 10% of what I know. All right. So, but I'm willing to give you everything that I know, and I would not charge you a dime. I promise you, I'm not going to charge you a what? I'm not going to charge you a dime. But, guys, can we have an agreement? Can we have an agreement? Can we have an agreement? Guys? Let's do something real quick. All right? Let's do something real quick. Tomorrow, 7 p.m. Nigerian time, 9 p.m. Kenyan, Ugandan, Tanzanian time, and also Israel, and 6 p.m. Ghana time, 7 p.m. South African time. We're going to have another amazing session. All right? I'm bringing one of my friends who is the best trader we have in one of the major cities here in Nigeria. All right? Dr. Banks is his name. Dr. Banks is so good, guys. You need to listen to Dr. Banks, right? You cannot afford tomorrow's session. Guys, you cannot afford tomorrow's session. So what? Since you cannot afford tomorrow's session, right? Sorry, let me see. Good.